Hi, it's Brent with another chart breakdown, this time for Procter& Gamble, supporting our Clarity Spotlight on Walmart last week. Looking at a higher time frame weekly chart for Procter& Gamble, we see a big accumulation period happening here around the Great Financial Crisis. We'd see a breakout of that period and then a sharp pullback into that same range right here. What this is we talk a lot about in trade therapy, institutional tactics and creating the path of least resistance. They want to draw people into the trade and then take them back out, basically pulling all of the people that would be selling into them as they try to bring prices up and out of this range. It's called creating the path of least resistance. They did it again here. It came up out of that and then came back down and back tested this range here, which is right at the accumulation level here. So once that's completed, so they've drawn people in, taken them out, drawn people in, taken them out, the path of least resistance is created. And oh, look, here's this sharp price advance out of this range. That continues on into COVID. And then we hit a reaccumulation period, which takes us into the post-COVID environment. Interest rates are going crazy. Inflation is going crazy here. And Procter & Gamble went through a reaccumulation period here. We see some very common tactical behavior, institutional tactical behavior in terms of price jumping up and then pulling back and jumping up and pulling back. That's what creates these accumulation and reaccumulation structures where institutional money is trying to mimic a breakout to draw in retail investors that they then sell into, come back down to the bottom of the range, raise capital from shorting this period, and then flip-flopping back to long and repeating the cycle over and over again. It's what creates these formations. It's also what allows for long-term uptrends to continue. Institutions need to be able to bank profits and reload their positions, and once they do, then the market trend can continue. Back to the current day, where we're at with Procter & Gamble, we saw it break out of its reaccumulation range. It jumped across the creek right here. It then came back and backed up to the edge of the creek, also retesting this moving average cluster here, the 30-week simple moving average gold and the red, the 55-week exponential moving average are bundled right here. We saw it support there. And then we see a very long shakeout here. This was the yen carry trade shakeout here. Look at that candle. Whenever you see a long shadow like this, high volume like that, that is a stop loss hunt. That is institutions in Wall Street looking to just take out as many retail investors as they can before they continue on with their uptrend and their markup campaign. So the point that we made in this week's Clarity was that we're making a series of higher lows. This long position here from a market structure standpoint was defended, meaning there are institutions that are long at this point. They waited for the reaccumulation structure to break out and then back test. They entered here. And then on this back test of it, we're looking for that level to be defended, which it was. Now we're up and often going into our new uptrend. We will see a continuation, more than likely see a continuation of our markup trend. A couple of things to keep an eye out for if you are in Procter & Gamble. Always be taking a look at price and how far it's extended from longer-term weekly moving averages. The longer they extend away, the higher the likelihood of a pullback will be. So I think that's a wrap on Procter & Gamble. I hope that provided a little more insight to our written content in our Clarity Spotlight last week on Walmart.